Well, hello, you trader nerds. It is a big day down. Look at this. Wow. Why didn't somebody wake me up when I was sleeping? Wow. I need to give y'all the hotline to call me and wake me up. This is amazing. So the ES is down 1.87%. We don't see it that often. And look at this. NQ down 3.23%. Wow. Waka waka. The market is dropping. And look at this. The VIX is up at 18. Volume is elevated, it looks like. AD, though, look at this. AD on a down day of 1.85% is 147 positive. Wow. How about that? So we're below VWAP. And if you look at it, and everything looks really mild because we are in the opening 15-minute range of the day. How about that? So the hourly midband is trouncing downward a little bit. So very, 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 very interesting. Let's see if we could have told anything from our volume profile. So let's pull volume profile over. If I can find it. Volume profile. Let's bring it in. So this is NQ. So it looks like we had a little bit of support at our oversold level, and we are definitely oversold now. And we've got a gap right at the 50% line. So once things apparently settle down, you would think that we would migrate back up here. I think what we are seeing, and I think we got a tech sell off because of something in China or something. I forget what it is, but I was just reading the headlines a while ago. So no big deal. I don't think we're just oversold for the fair value zone above. So hopefully things will subside, or hopefully not. Hopefully it'll keep on dropping and we'll be able to buy technology a lot cheaper. So let's look at the EMinis and see what it looks like on the big green monster. And EMinis. Aha. So this is a little different here. We are overbought for the fair value zone below, which would indicate that if we stay here for any length of time, that there's a good chance that we may drop down to the fair value zone and test this area here. So the E-minis looks more bearish than the NASDAQ does for certain. But we normally use this chart on the ES, and that's what we've proven time and time again that this thing looks really, really good on is the E-minis. And it's probably just as good on the NQ, but here I would be more apt to believe that we are overbought for the fair value zone below. So there may be more movement to the downside. Let's see our linear regression. Linear regression looks nice and calm. Look at this, though. We were a lot farther down than we are now. So it looks like what we talked about is actually happening is like knee-jerk reaction. What do they say? Buy the rumor, sell the news. And looks like it was a lot further down. Now, we could certainly go back down and test this area, but everything looks really, really nice and orderly and structured, and I don't see that we have really anything to worry about. I don't think. And I think this is probably overdone altogether. But interesting, right? Interesting to see. It's still within the upper linear regression. I mean, it's still up, though we are, if you'll notice it, our slope of the linear regression after all of this is certainly getting flatter, right, than what it was before. So it's interesting to look at, no doubt. Let's see how our account's doing today. Wow, look at this, down 17K. But on the ones that are doing the just this strategy, not that bad. Considered, I was afraid to look at it and say we're probably down 7,000 or so, but it's not that much, just 2,400 there. And on this one, 565 on the day. So still up 263 on the year. So we find that good. I wonder if any of our covered calls actually failed. And it looks like it did. Let's see. Let's change this to 14 days. So it looks like one of our covered calls triggered, right? It failed at $1.13. Wow. So that was instantly. We've still got a working order here on a put that is probably really upset. And what is this? That was on 124. Today's the 27th. Okay, let's see our positions here. Positions, ES. Oh, look, no, we got to look at the right account. Here we go. Our ES positions, our hedge is actually working a little bit today. Look at that. Our hedge is up $203, so it's doing its job in one of these down markets. Our bill is just doing what bill does. And then our TQQQ is where we're really getting hurt today. So let's see what we've got here. So we've got one call that's up $380 on the day. Those are the days that you go, I'm glad that I sold the covered call, right? What do y'all say? China said they have an AI developer called DeepSeek that is a lot cheaper than the traditional companies. Who knows if that is true? Yeah, that's what I heard. And, here's the thing that I was reading today is that even though we're spending billions and billions and billions on AI, that, they're doing things that maybe found a way. It's like I was reading the what's his name, Scott Rubel's email this morning, and he said it's kind of like in space where NASA spent millions and millions of dollars to develop a space pen that people and astronauts could use to write upside down in space, right? We spent millions and millions of dollars to develop that, while the Chinese just used a pencil, a 10-cent pencil. So, if you can do something and just, do it cheaper, it's really good. So that's why we're seeing the problem in tech is that they're using a pencil, whereas we're spending millions and billions and billions of dollars on a space pen. By the way, I had a space pen and they were really, really cool, and then I lost it. So one of our covered calls filled at a 50% profit, so we took that off. And our put is getting hurt today, but it's still relatively safe, isn't it? TQQQ is down at $78, and our cash secured put is at 73. So, and look at this. Our MES positions are not doing bad at all, down 733 on the day. Let's look at those. So our put debit spreads are doing really good. That's not bad we're only down $46. We're actually up on our naked put. Look at that. Isn't that crazy? And MES and our put debit spreads are popping in a little bit of money. So that's fine. Let's see how our hedge is doing for the day. Let's go to cap requirement. Let's look here and see if our little hedge, how it's looking. Let's go to MES and TQQQ. And do that and risk analysis and do this to points and do this up to 40%. So we got a little bit of a hedge here. Not much, but we got a little bit of hedge. Probably by tomorrow or Wednesday, we need to put something additional in, that would, it might be a good day to add a hedge. Josh, it definitely might be, but I think I'll wait till tomorrow. Let's see what this does today. And let's think about putting a hedge in tomorrow. I think that's what we got. Let's see what we got. We got a 3.5, a 3.5, and a 3.5. So all of our hedges are matched with shorts. Remember the day that we bought a put, right? Now, the best day to buy puts is on up days. The best day to sell puts is on down days. But I definitely wouldn't sell one and take on the added risk of a naked put without buying one. But that's probably, if you have plenty of hedge, that's probably what you should do, is sell the 3 today to start your next hedge, and then anticipation that we'll probably get a rapid little pop-up where you could buy the 5 at a lot cheaper. But you're taking risks to do that. So I think we're good. I don't see anything that we need to do. So all in all, I think our little account has held up pretty good. We're not fully invested yet, so this is good. And if we keep going down in tech, we'll just buy cheaper TQQQ in February, on February 1st. So really nothing to see here. Market's down. We are good. Hope you all have a wonderful day. I appreciate you and love you. And I will see y'all tomorrow.